Welcome back, everyone. Hope you guys are having a great day as always. Today we're going to be revisiting PayPal, and this was heavily requested by the community, so here I am doing a video on the Capital Mindset channel. So PayPal is being asked a lot because it actually got down below that price point in which I've been saying it was interesting, which was $70. Today it's sitting at $61.46. Just to remind everyone, take a look at that 5-year holding period or 5-year price action. You can see that they hit a high of about $308, was it? Yeah, $308.53 in 2021, all the way now down to $61.46. So I'm going to begin this video by rehashing some of the ideas or concerns I had with PayPal. And we can recall, I have plenty of videos on PayPal. You guys can check them out on the channel. Just type in Capital Mindset PayPal. They should come up, or you go to my actual YouTube home, and then you can type in the search bar right there, PayPal, and it should come up, or PYPL, the ticker symbol. And those should come up. All right, so what were some of the concerns I had about PayPal? Well, let's start with the business model. And this will actually relate itself over to why comparing it to some of the opportunities we had last year, for example, in Netflix and Meta. And this is the discussion we've been having in the community for a lot right now, because it's, people are asking, is this another Meta opportunity? Because I feel like people who've been watching the channel saw me enter the Meta position and then saw its success and then kind of want some sort of the next Meta, the next Netflix opportunity. And it's not so simple. And while there are going to be other opportunities out there, and this might be one of them, it's not so simple as to say, well, this stock was up a lot, now it's down a lot, therefore we should buy it and the price will be higher tomorrow. We got to go a little bit deeper than that. And I'll kind of first talk about PayPal's business model. So we'll go to their investor update presentation, and I'll go ahead and zoom in for you guys because my screen I know is 1440p and it records at 1080p. So for me, it looks normal. And then when I have the video and it renders and everything, it looks really zoomed out. But always have to remember to do that. So if we take a look here, they kind of are trying to guide you on what are the key metrics to look at for their performance. You have something like active accounts, total payment volume, net revenue, and all that jazz. I'm going to focus first on active accounts and total payment volume. You need to understand this about PayPal. Something like PayPal, they're a network, a payments network, right? They're not the rails like Visa and MasterCard, but they're a means for you to purchase products safely on the internet. And one of the metrics by which, and they're both related to another, is active accounts. The more people that are using the platform, the more money that will transact through their platforms. And remember, they own PayPal and Venmo, and they also have some, let's call it private label products for various merchants on the internet. Now, we do have total payment volume, and you can see that it's growing nicely, now sitting at $1.36 trillion, a CAGR of about 24%. And you can see that the delta is, well, it's not zero, right? There's a difference between 24 and 14. What does that mean? Well, that means the amount that people are spending on their platform is increasing, or it's growing at a faster rate than the amount of people that are using their platform. This is a good thing. This means that people are getting more and more used to the idea of PayPal. And to an extent, I think a lot of that has to do with their white label business. And again, what I mean by white label business, PayPal does build the payment solutions for online merchants as well. So it doesn't say PayPal on it, but it's some secure checkout that the merchant then has their own kind of branding on it, but it's PayPal. So that also exists. And you can see that all the other metrics in line with these other metrics growing have also grown. So what they're trying to show you is that, okay, well, if we grow active accounts and total payment volume, the other stuff should grow along with it. Revenue should grow, free cash flow, EPS, all that jazz. So pretty simple to understand. And I feel like PayPal is not a very difficult business to understand. It can get a little bit, but for the most part, on a bird's eye view, it's pretty simple. So we can see that they're kind of, this is their way of saying, okay, this is why you want to use PayPal. So the consideration, the preference, and the loyalty. So PayPal brings 20% more buyers because people are more confident in terms of paying with PayPal. PayPal users make more purchases, 60% more purchases. This is very similar to actually the same proposition American Express gives to merchants. They say, well, American Express users spend more, therefore you should accept an American Express card at your location. And then we also see the preference terms of checkout, right? So that kind of going back to what I just discussed, where people feel comfortable with the product. Okay, you're not maybe willing to buy with that merchant because you don't know if it's a scam or something. And therefore, PayPal is there to protect you. So if PayPal is there, you're more likely to actually complete that purchase, okay? Because it just builds the confidence. And then again, that confidence builds that loyalty, because now you see PayPal and you think trust, okay? You trust them that they're going to protect you. And then all these other stuff, I feel like is kind of just, we'll brush over it because it's not really too important for what we're going to be discussing. But with all that being said, I think this is actually their enterprise grade processing for merchants. And this is what I was basically referring to earlier as like their white label products as well. Now, I do want to say, oh, look, partnership with Microsoft. Look at that. They want to throw in Microsoft. Everyone wants to be associated with Microsoft these days. And then that's kind of not really too important for what we're discussing. Total payment volume, you've already discussed this. Cross-border trade, kind of similar to total payment volume, or the total volume of dollars flowing through their system. It's just kind of showing you transactions across borders, etc. I feel like for the rest of this, we don't really need to delve too much into this. I do want to, however, touch upon some positives here. So if I take you over here to the balance sheet, you can see that it's a pretty well capitalized business. I wouldn't say that PayPal has any issues in terms of making sure that they have ample liquidity. You can see they got a decent amount of cash sitting on right there. And then go down to the liabilities, you can see long-term debt sitting at about 10.481 billion. And then you can see in the current liability section, they're fairly well capitalized. Keep in mind that funds payable and amount due to customers, it's essentially kind of matching out with their funds receivable from customer accounts. Because again, they're just a transactional product or a transactional platform. So don't be too alarmed by that. I would be focusing on the other line items more so than that. Okay, that's fairly normal for this business model. Okay, so now that we know PayPal is pretty well capitalized, what's the issue? Why did it crash? That's the question that many people are asking. Well, it should be, I guess, obvious because I'm making this video late, but the margins expectations have come down. And this actually goes back to my older videos. If you haven't seen my older videos, go watch them. I will just basically very quickly summarize one of the key parts of concern and why my valuation was a lot lower than other creators or other people on this platform. Because if you remember, when PayPal was trading at much higher valuations, my valuations seemed to be a bit lower than the others. And a couple reasons was the business model type. I call it a race to the bottom. I don't love businesses that are in areas that are constantly looking to bring down costs. And what I mean by that is, we'll take a look at PayPal. PayPal makes money from the actual transactions and taking a fee, a take rate, so to speak, like a toll road of each time dollars flow through it. So if the only way to increase those margins is to increase the take rate, and then you have all these other services that are coming out and have a lower take rate. And here's a big threat that I kind of see, and it's a question mark. It's Stripe. So Stripe is challenging PayPal in some areas, but not in others. You also have Square with Cash App that is challenging Venmo. I know that there's the anecdotal, right? People are saying that, well, now the youth use Cash App. They don't really use Venmo. Back when I was in university, Venmo was the one that was being used all the time, but I guess now it's kind of flowing out of favor. I use Venmo on occasion, but really there's other products like Zelle that don't charge you anything, but there are limitations to Zelle. So there's a bunch of optionality out there for the customer. And so it's not really a business with massive moat around it, just with no one being able to challenge them. It's quite the opposite. So that's one of the issues that PayPal is having to deal with, and it's coming out in the form of margin compression, and management was guiding this and the market did not like it. So we are reversing a lot of that. And then on top of that, growth is projected to be quite low. So go back and check out my older videos. Check out scenarios 1 through 3 in some of the videos where I was showcasing, and I put those at the highest probability. And then in aggregate, it came out to a conclusion. The conclusion that why people ask me about it now was, okay, I'm interested in it below $70, okay? And now that we're here, right, let me go back and kind of explain my rationale there. Well, if you saw the growth that I was penciling out in a lot of those scenarios, well, they were really timid amounts of growth. And the reason why is because I didn't want to use the growth rates that were being projected back in 2021, 2022, because that was tough comps. Let's just say a lot of demand was pulled forward. And this is not the first company that we talk about where demand was pulled forward. There's a plenty of companies that we've looked at time and time again where demand was pulled forward. Meta being actually one of them as well. Netflix is another one. And so when you were modeling that out, we want to take that into account. We don't want to just use momentum or just correlation to see, okay, well, across a series of time, it's growing by this much, and then it will continue to grow by that much. No. So we want to intelligently make those adjustments. Now, right now, I do believe that PayPal is priced for low growth. Okay, so getting back to, I guess, the crux of the issue, and I'll spare the moments or spare your time in terms of actually modeling this out. I still stick behind the valuations of before. Nothing's changed on that front, just the assumptions for growth. Just focus on the conservative assumptions that had the higher probability are the ones that ended up probably becoming more correct here. So getting to the last bit of conversation, is this another Meta or Netflix opportunity? And because, stock price was much higher, now it's a lot lower, therefore we buy it because it will go back to those highs. That's a flawed argument because they're very different businesses. I look at Meta and I look at Netflix and I say that they stand on their own. And remember when I was making the videos, at least sharing my ideas as to why I was acquiring Netflix when I was, and remember in the comments section, there were challenges. People had concerns and challenges against the thesis, etc. And mainly around the content just not being good. And even though I presented the data showing that Netflix was time in and time again, just putting out the most popular content out there. What I wanted to also highlight from that is, well, Disney Plus can stand on its own and so can Netflix. But PayPal is a platform in and of itself that if they charge too high of a take rate, there's nothing different from me using them or a Payoneer, for example, something like that, or Cash App for Venmo. So with Netflix, if I don't pay Netflix, I don't get Netflix shows. I can get HBO shows, I can get Disney Plus shows, but I can't get Netflix shows, and vice versa in the other case as well. So they're unique in their own way. Something like PayPal, there's not really that much of a differentiation besides reputation. That is the big differentiator there. And then when you take a look at Meta, you're also looking at a business that has its own platform, a massive platform from which it controls and operates and can take data and then from there kind of do its thing. PayPal is not comparable to those guys. And right now what's happening is not something that happened with Netflix, which was just them questioning, can they even make cash, right? Can they even produce cash? Yes, they could. And they're showing that now. That's what Netflix has proved. And then the question with Meta was, will they blow, remember Chamath Palihapitiya, $250 billion on the metaverse? That was so, I guess, poorly researched, let's just say it that way. And PayPal, the concern is margin compression. So completely different concerns here. Now, PayPal can actually play out really well. I'm not saying that. So now, I guess the biggest part of this video, or the biggest question is, am I now buying PayPal? Well, the answer is quite simply no, I'm not buying PayPal. I'm not buying it because I dislike it, hate it, and I'm going to short it, therefore, because I think it's going to go down. It's just there are other opportunities where I feel like my capital is better allocated to right now. But, that being said, I can acknowledge my opinion right now, okay, is that I think PayPal is a much more interesting proposition below that $70 mark where it is now. Now, you're basically accounting for a lot of negativity at this point. Now, it can get worse, and that's the problem here. So it can, in fact, get worse if competition starts to continue to ramp up against them. I do see that as a large concern there. So I don't equate them to the same opportunity as Meta and Netflix from last year, or the other opportunities we had like Unum and the oil companies, et cetera, back in the earlier years. But I do see it as something that if they turn things around, if they show the market that, hey, no, we are going to keep growing faster than what you think. We're not growing at low single digits, but we're growing at, a little bit higher in the double digits, maybe 12, 13, 14%. That will surprise the market to the upside. And oh, by the way, we're maintaining our margins, or our margins are actually correctly expected to recover in Q1 2024. That will make the market happy. So until then, PayPal is going to be quite suppressed. Now, I'll kind of showcase real quick again the valuation here. So I'm coming at around very close to where current prices are at now, adjusted for the pretty much current market conditions. So we're sitting at around the valuation where if I really wanted to get involved in PayPal, and I believe that they're going to have anemic growth for a while and then kind of averaged out, basically that demand was pulled forward, these prices are relatively attractive. If I start to think that growth is going to recover or accelerate to mid double digits, et cetera, well, then that starts to change the proposition. I should do better. Now, again, for my purpose here, I'm not really I'm deciding not to get involved with. I will say that analysts have been switching their ratings to buy. So I've noticed that from at least, Bank of America, even Morningstar switched over. So if you're just going off of analysts, there you go. And I think it's actually coming in as a strong buy there from the analyst aggregate measure there. So analysts are saying that right now prices are attractive. Now, if you do more research and you decide that for yourself, that's on you. That's your decision. I will say that I think there's far worse out there. And I'm making it sound like it's bad. It's not. I don't think it's bad, okay? But I'm not going to be involving myself here because I'm allocating capital elsewhere. And I'm trying not to gather up too much sort of speculation and supporter positions, even though I like to do that and I find it fun. More recently, the capital that's been coming in, I've been selectively and purposefully allocating it to my core ideas. So with that being said, let me know what you guys think about PayPal down in the comments section below. I know that this is a heavily talked about topic, and now that it's gotten below $70, the community has been saying, hey, what do you think? What do you think? It finally got below that $70 price point. So those are my thoughts. And, hey, it could do well, okay? It could do well. With that being said, guys, thank you guys so much for watching, and I will see you guys on the next one. Bye.